Today's number is 2 because yes, we've just seen one of the largest transactions ever recorded on the NASDAQ go through. Could it be signaling the top or more of a rotation from Wall Street? Well, one thing's for sure, momentum stocks seem to have lost their ground, and one of the most important charts that we've been watching has finally broken down. So with Nvidia, Palantir, and many others starting to shake it up, what exactly is going on for us as traders and investors? In today's video, we'll take a look at stocks, commodities, and cryptos, including a special look into bonds to see whether this is the calm before the storm or something bigger is about to happen. Don't go anywhere, everyone. We'll see you in a moment. Well, welcome back everybody to the Daily Show. My name's Tom. In today's video, we'll cover off on the latest macro, the big dark pool transactions that came through over the last 24 hours, and of course, what some of the biggest on Wall Street are doing and why we need to be paying attention. It was, of course, one of those sessions that you kind of do remember because Palantir sold off massively after a short seller report came out about them. And of course, we saw big tech starting to drop through some key levels. Now, this will come as no surprise if you've been watching the channel, especially over the last week, as we've been talking about this together. But maybe what will come as a surprise is still how calm everything is underneath the hood. So let's start off with the bonds market because corporate borrowing costs are tightening big time. And what this is showing us is that nobody believes that there is a liquidity risk, a debt risk, or anything else out there right now when it comes to at least the bonds market. Now, the last time we actually saw this was 1998. And if that number sounds familiar, it's because we keep being able to draw parallels between this AI boom and that particular time. In fact, we can even go further than that because when you take a look at emerging market corporate spreads, courtesy here of top-down charts, you can see that we are either at an 05 level or the famous 07 level, where, of course, things got very rocky very quickly. So why is this so important? Well, it really is like the calm before the storm. Basically, big hedge funds and anyone else out there are all kind of considering that there is not much risk in the market. They're not really maybe hedging as much as they used to. And of course, in terms of the bonds market, which usually smells out big debt risks, it's all good, all green. And this has really taken us up. You can see here that the percentage of high yield bonds registering a 52-week high has surpassed 20%. And when that's happened, often we've been at usually okay periods in time. Usually, actually, you're coming out of either a recession or a decent pullback, or you're in one final last stretch. Remember that 2005 number? Well, yeah, the last time we saw a read like this that led on to, of course, something worse was 2005. But what it did bring with it was still more euphoria and still more gains. So is this sell-off that we've just seen over the last couple of sessions actually something bigger? Well, when you look underneath the hood and you can see here Optima has some great data, it isn't as scary as you might think. It was time for us to see a pullback in big tech. And really, this is a classic Wall Street rotation. 10 of 11 sectors actually beat the index over the last 24 hours. So that means that if you owned any of the other sectors other than tech, they would have been up against the index anyway when you compare them together. Now, this was showing us and signaling what we call breadth rotation. And it's pretty normal, especially when you had 10 stocks making up 80% of the gains over the last couple of sessions. Now, which sections have we been, or sectors have we been looking at? Well, of course, we've been looking at healthcare recently. We've been looking at home builders starting to show signs of recovery and biotech. And they've continued to be kind of the story of the last couple of sessions. And you can see here, home builders were actually the best sector over the last 24 hours with gold stocks, semiconductors, metals, tech, all down the bottom. They've been the strongest this year. So it makes sense. It looks like a rotation. So is there anything actually to be concerned about? Well, there are some concerns. Probably the most noteworthy
is that us, we're the retail traders, we're getting pretty heavily into this market in terms of leverage. As you can see here, according to the latest Goldman Sachs report here, courtesy of John Marshall, you can see that we have a huge discrepancy between the so-called pro traders who are,
just chilling, not really doing anything, and the retail traders who are going absolutely ballistic into probably concentrated stocks. Of course, retail love tech, so we always know it's usually crypto, Palantir, and the Mag 7 that everyone jumps in on, and generally near the end, you see a bit of leverage. So have we hit the end? Well, we did see a monstrous transaction. It's the second largest Q transaction that we've had in a long time. So this is a big one. It happens near the peak. And since this transaction came through, of course, we know that we saw a bit of a sell here on the NASDAQ coming through. Now, the last one that we got, which was actually quite big, was in June. So it could be that that June position has done some take profiting, and maybe even the position over here from the April rally, they've actually also said, you know what, we're going to take a little bit of profit off the table, and that was a fairly good run. It was specifically targeted, though, at tech stocks. So it wasn't that we saw huge transactions across the board. We were just seeing a bunch in tech stocks. So again, it looks like Wall Street, at least for now, has kind of said, you know what, that was a great gain. Maybe we go into what we call a pit, which is a pullback in time. Similar looks on the chart like this, or maybe even a slight dip. And you'll see why that's perfectly normal during this period in the cycle. Now, what about Citron Research? Well, of course, they came out with that blockbuster report on Palantir after not really doing short seller reports for a while. I've noticed over on X, by the way, follow us on X if you haven't already. There are a couple of people, of course, making a big deal about Nvidia from 2017 because they famously, I believe, said that they were kind of short selling it back then. They may have also made some money for a little while, but of course, it ended up doing like a lot since that period of time. So again, timing will be everything, but they've come out and said that based on ChatGPT or OpenAI's pricing, they believe Palantir is worth about $40. And that, of course, is in some ways a catalyst that's actually been used as an excuse to sell off this market. It wasn't the PPI or the inflation potentially picking up. It wasn't Jackson Hole. It's just basically maybe a report. And of course, a bunch of people saying, oh yeah, we'll use something as an excuse to sell off. So is it bad? Well, Wayne's done some great data here. Obviously, Wayne Whaley always giving out great reports, some excellent data research. And what I like to always see here with Wayne's reports is what it shows you is that he's kind of expecting exactly what we would be. And that's because that's what the data suggests. And you'll notice here that we have a 9-to-1 actually win rate from around this period here to September 1st in terms of the market actually usually dips, then maybe pulls back up. But the September 19th, October 12th read tends to be more negative. In fact, only 2 up, 8 down. And then by the end of October, so this is October 26th to November 2nd, we end up being back to 10-0. So what this is kind of telling us is that this is the market that we're most likely in at this stage. And I'm pretty sure every one of the viewers here, you guys that have been watching for a while, would know that this is exactly what we expect to happen in the markets around this point. You can see here in post-election years, this is usually where you see a bit of a topping of the market. And often you get a change in the guard. That is a change in breadth or rotation, and that tends to come through. We also know that in year 3s of bull markets, this is pretty normal. Basically, a market will go up, it'll go down, it'll end possibly positive, but this is kind of where, we're not actually like that. We're about here at this point with a small little dip there. So you can see that, yeah, we're following in line with kind of a lackluster year overall. Of course, since April, if you bought the dip, you'd be doing very, very nicely. A couple other notables. Crypto. Of course, crypto has been getting all of the love in terms of everyone's been super bullish on crypto. Then came, of course, a couple of large transactions recently. We just saw FU put through the biggest dark pool of all time since inception of this fund. And that could be a buy, it could be a sell. To me, it kind of looks like someone saying, I'm going to do a little bit of buy the dip. But that doesn't mean that it's stopped yet. If you're actually looking at the technicals, it may have to come back into this demand zone first. And we'll take a look at that later on today's show. But this is noted that there are quite a few sells going on. Of course, this is all mostly scary to people that don't really quite get it. But I'm seeing people talk about ARK selling up Bitcoin, about 559 Bitcoin worth 64.4 million sold by the ARK 21 shares fund. And yeah, this is pretty normal. Again, when money goes in, it has to, or goes out, it has to rebalance itself. But we also saw BlackRock selling around 19,500 ETH worth about 83 million. Now, this is all off the back of them purchasing over the last couple of months. So Wall Street's now involved in crypto. Now that we know they're there, you have to expect these types of shenanigans. Huge amounts of buys, huge amounts of sells. Generally, by the time these sells are already announced, it's been about 2 days, 3 days before. And that's why we like to, traditionally track it with those big dark pool and hidden trades. And of course, if you like that stuff, make sure to sub to the channel because we do cover it here regularly. So we know Ethnet shorts are maxing. So basically a lot of people lost big time on shorting Ethereum during that squeeze. Then it hit a big resistance. And of course, we've then seen a bit of a drop off in Ethereum where it's come back down a little bit there since that point. But I think what's important to note there is that it doesn't mean it's over. Remember, with Bitcoin, it's well known to have several traps and to really euphorically run. Now, traditionally, you often do see these huge euphoria runs where everyone just goes, fiat's dead, fiat's dead. And you may have said, well, that's kind of what we just saw. But we haven't had that kind of weird alt market come with it as well. And in previous times, as you can see here by Rect Fencer, we've often had a bear trap around this period, followed by a decent rally, like sometimes an exceptional rally, that can go into that end of cycle style run. If you actually take a look at the last couple of runs for Bitcoin or crypto in general, Bitcoin leading it, then oftentimes they've actually topped off somewhere around December. And that would mean that at 2025, December, we may be seeing the peak or somewhere around there for Bitcoin, at least if it does stick with this particular cycle. So is crypto done for? Not really. I mean, Michael Saylor came out and made a post, something about volatility is a gift or something like that. And effectively, last time he did it, dropped 30%. Of course, we'll look at the Bitcoin chart later on. But I mean, it makes sense. Big euphoria, markets always wipe. If you've been in the crypto game, you'll know how it plays. And now Wall Street's in there, so it's even more interesting. So again, is it bad? Well, not really. Again, we expected rotation. We expect some kind of pit style market here, which is that pullback in time. And we also expect that at this stage, look, Wall Street's really bullish on themselves. There have been revisions across the board that effectively are saying, you know what, we think the markets are really, really strong. We've seen consensus forward 12-month PE valuations at their high percentiles, so it makes sense. Information tech really, really high. Others relatively cheap. So, of course, what's been picked up? Yeah, you guessed it, the relatively cheap points. And it's also incredibly rare to see the end of a market around August. It's more likely to see it in something like December than it is, funnily enough, than it is in something like August. Only one time have we seen the end of the market. Now, that's not to say for someone that's bearish out there that it's not scary. Number one in overvaluation across the board ever. That's the type of market that we're coming into at this stage. 29, 66, these are famous overvalued markets. 99, 2021, and now 2025. I think most people can agree that we're being driven now by speculation again. And obviously it's on an exciting new technology, which is AI. But a lot of the time this does tend to happen. So it's all going to be timing is everything. And obviously risk management is going to be everything. For the rest of the week, these are the earnings. China's doing okay in terms of its earnings, as we saw with a bunch of their stocks doing quite well over the last 10 sessions. And in particular, that's some market that we've been kind of looking at. But again, when the US falls, a lot of markets do follow. So let's take a look underneath the hood again at the charts here and see whether we're actually seeing a drop. First up, advanced decline line. It's not too bad. I mean, we saw more breadth. We saw more stocks actually up over across the board, and it was just really tech that was failing us. So again, advanced decline line, not too scary up here at the highs. Options high-low levels, here they are. Again, yes, there's a bit of a sell coming through. Where's going to be the first support? Well, you'd have to think somewhere around this daily 20 moving average and 63 kind of 75. So that level will be worth watching. And then underneath that, of course, is 6,200. That's the classic one that we hit just a few weeks ago. So again, if the market loses 6,200, then I would expect something like this to occur. And then we might find ourselves in the 59, 6,000s. About a 6 to 8% pullback would be pretty awesome. And then, of course, I think that the markets may still want to be resilient based on everything we've seen underneath the hood. But are there some excuses coming out? Absolutely. Now let's have a look at the S&P in terms of options. You can see here we started to enter into negative gamma territory again. 6,400 is the options put wall. If we get underneath that, that will end up starting negative gamma. And you can see that all it takes is 24 hours for all the puts to start to arrive. And clearly this is going to be the big fight zone. So we closed the market around 6,400. That's going to be where the real fight happens. And you'll notice people are already starting to stack that 6K, which comes as no surprise because if the markets do start to sell, let's say we lose 400 points, then yeah, there's going to be so many positions at 6K. It's going to be very difficult for the market to get through that easily. Either or though, 6,400 is the point to watch over the next 24 hours and that 63.75 zone. Tesla, same old, same old. It's kind of just chilling. Yeah, it went down a little bit, but still it's kind of 350 is the call wall and it's holding okay considering the rest of the market as it has been behind the rest of those big tech stocks. And Nvidia, of course, was the famous one here. It's been struggling with the 185 level and it fell below the daily 20. So Nvidia looks to me like it's a wait and see for more. The first initial trend loss has happened. And of course, that doesn't mean it's over for semiconductors, but it could mean that maybe cheaper prices are on the horizon. Now let's have a look at the charts. Palantir is, of course, the classic one. Everyone freaking out about this over the last 24 hours. We saw a monster trade just last week. Of course, we reported on that. Since then, we found out that actually short sellers are all over this thing. And then 9.35% was lost in one session, negative. So that filled the gap. Has it come down to enough support yet? Probably not for someone like me, because I think that when you get outlandish candles like this, you often go into a bit of critical. The points to watch will be something like the weekly 20 moving average for something like Palantir. But I'm sure many retail traders will be trying to buy the dip. And this is basically just in high volatility now. And remember, guys, if you've seen the thing with retail, often we don't realize is if you've seen the price discovery already, then you assume, oh, why can't it go back up to there? Just go and have a look at 2021. And sometimes you do end up realizing there are mistakes that are made off that assumption. Remember, it's not so much about where the price has been as are you seeing a huge drop in momentum or are you actually seeing funds buying it up? Follow the flows, not your opinion too much. RSP, you can see here, again, the market doesn't look that scary. This is the equal weight S&P. It actually almost made a new high. So what's that telling us? A broadening of the market. Again, big tech drops. It's going to be impossible for the market really to hold up too well. But the equal weight is doing all right. And that's because big tech makes up over 42% of the S&P. Just that is a concentrated market if you take XLC and XLK into consideration. Semiconductors versus SPY dropped, of course, but no worries there in terms of dropping through. And the bonds market didn't at least react yet. But that often is one day delayed. So we'll see how that plays out. US dollar did rise, but not enough to really trigger those 98 kind of 90 zones. Gold dropped a little bit. Again, still trapped within the range, guys. There's nothing really else to say about it. So still coiling quite a lot on gold. And silver also dropped as well. Again, still within the range. So we'll have to watch these over the next 24 hours to get more information on them. As we mentioned, Nvidia did drop the daily 20, which is often considered a weakness sign. It hasn't actually changed trend price action wise. It would need to do that by 170 to even lose the daily trend. And I think it's important to note, weekly's up, monthly's up, currently daily's up. So it's just one session, but it is something that we expected. And this is sending shockwaves through because a lot of people are worried about it. Look, it is what it is. It's still up a ton. So you've got to remember it's not enough to go, oh, wow, it's all over or anything. But we have seen some of those bigger trades start to come through. Let's have a look at Tesla. It's just doing its thing, chilling around. Again, it's holding strong for now, so Tesla could still potentially go 350, 380. It's a stock that's just going to do its own thing. It's not going to follow what everybody else is doing. It's going to do its own thing. China markets dropping. Maybe they're going towards the daily 50, which will be a big test for it. So that's the HSI. Obviously, if you look at something else like a KWEB in America, you're going to see a different story. It's actually quite strong near those highs. And China still looks like it's got a lot of liquidity and a decent performance in front of it potentially there. US 2K, again, did drop, but not as much as the rest of the markets because it's a breadth rotation. And the NASDAQ, as you can see here with the technology stocks, they dropped against the SPY underneath that daily 20, solidified it. So that's telling you that there could be a little bit more to drop. Generally speaking, even in the most aggressive of trends, you'll come back to a 23.6 fib, which will be somewhere around here in terms of ratio, or a 38.2. So these are the two fibs that we'll put on in the subsequent videos after we see more information. Take a look at the NASDAQ now, because I'm sure a lot of you are interested in it, and that is pressuring the daily 20. So again, starting to look a little bit weaker. Some people are going to draw trends behind here, and they're going to say, look how important this level is. I wouldn't be surprised to see someone try to dip purchase off that 6,400 on the S&P, so it's going to be an interesting 24 hours. But yeah, certainly the main thing here is the dropping of this particular code, which is Palantir, Mags, Oracle, AVGO. This doesn't bode so well. I mean, that is one of the best looking, ascending kind of channels here that we've had in a long time, and it's dropped it. We suspected here that that's probably what was happening with higher vol. Remember, when volatility spikes, you got to be a little bit worried. And yeah, I mean, it just tells us that most likely lackluster returns are incoming for a little bit as we see rotation occur. Ethereum dropped underneath 4,200, which now opens up the potential here of going back into the 36s. There was a large trade. I don't know if it's got enough support on it yet. Daily 20 alone, not enough for me, but you could make a case for it. I'm sure there's some anchored VWAPs there. And when you look at Bitcoin, wow, it really needs to hold, because if it doesn't, then next up, could it be about 105, which is like the most traded zone through here. So at this stage, you can see, again, drop here, big fall into support, might find a bit of a bid, but if it drops through, you're starting to say, well, this was distribution, get back down into the 105 or maybe even the 98 if it's going to be that more worst case scenario. Either way, though, you generally expect shakeouts in crypto, and it does look like this could be the one of them. Now, that's not everything, because, of course, Wednesday, we're about to see some extra information. FOMC meeting minutes from the Fed, and then on top of that, we have a whole bunch of info coming out from Jackson Hole. We've obviously got Fed Chair Powell speaking on Friday. So the volatility is unlikely to stop just yet, guys. A lot of things going on. If you were in the rotation, of course, it's something we have discussed here on the channel. Congrats to you, I guess. The big thing is, though, guys, remember, come from the abundance mindset. If it doesn't feel good to you and you're not believing you have edge in the markets, then sometimes the best thing is to do nothing. In this case, though, you do need to do one thing. If you haven't already subscribed to the channel, make sure to do so. Smash that like button, hit the bell icon as well. And of course, follow us on other socials if you're interested. I'm posting a bunch on LinkedIn. Obviously, we post on X daily. And if you're interested in finding out more about how we figure out rotation, do this type of stuff, find the best stocks in the world, then check out our advanced course and day trading course over at fxevolution.com. Thank you so much, guys. We'll see you in the next one. Good luck and bye for now.